The US government shut down again. But here's the question: should we be freaking out about it? Well, this actually hit our wallets, or is it just political noise? Hey friends, welcome back to Ladder of Finance, where we climb toward financial clarity one rung at a time. Today we're breaking down the shutdown, what it really mean for the economy, the Federal Reserve, and yes, your money. So, economists aren't panicked just yet. They are saying, yeah, it's annoying, but it probably won't wreck long-term growth. Still, this thing is causing chaos in one super important area: data. Think about it. The Bureau of Labor Statistics, the Bureau of Economics Analysis, and Census Bureau all hit pause. No new reports, no fresh job number, no GDP updates. It's like flying a plane with the instruments turned off, and the Fed is the pilot. So, what's the damage? Economists estimated the shutdown cuts zero point 0.1 to 0.2% points of GDP per week. That's not catastrophic, but hey, it adds up. For perspective, remember the 35-day shutdown back in 2019? That one cost us $3 billion, according to the Congressional Budget Office. That's only a 0.02% dent in GDP, but still, that's $3 billion that went proof. Now, here's where it gets juicy. The Fed's next big meeting is October 28 and 29, and they normally rely on all that missing data to decide what to do with interest rates. But now, total blackout. The futures markets basically certain 98% odds that they will cut rate by a quarter point again. They already did it one in September. Most Fed officials are more worried about a cooling job market than inflation right now. Michael Feroli, JP Morgan chief economist, said the Fed's in an okay spot to handle the data blackout. Translation: they will probably still cut, just goosing based on old info. Risky, right? Normally, we'd have the labor department's unemployment data or the jobs report by now. But thanks to the shutdown, delayed. So everyone picking at private data instead, and it's giving mixed signal. ADP says we lost 32,000 jobs in September. Revalue says nope, we added about 16,000. It's like two weather app telling you opposite thing. Storm incoming versus nah, sunny skies. Meanwhile, the Chicago Fed's real-time unemployment rate barely moved 4.3% versus 4.3% the months before. So, yeah, everyone confused. If this shutdown keeps dragging, things get messy. We could lose the CPI report on October 15 and retail sales data on October 16. That's huge. Those reports show how inflation and spending are trending. And even when the government does reopen, it takes a time to reboot everything. Last time in 2013, a 16-day shutdown delayed the job report by 3 weeks. So, even after this end, the data fog sticks around. Now, let's talk about the people behind all this. About 715,000 federal employees. Regularly, a third of the government workforce are furloughed. That's less than a 2019, but still a huge number. They will all get back pay later, but try telling you, landlord, don't worry, Congress will pay me back eventually. Economists also expect a wave of delayed resignation this month. Basically, people who were already fed up. And if layoffs really happened, it could hit public sector job growth in October too. So, no, this shutdown probably won't crash the economy. But it is blinding policymakers right when they need visibly mass. It's like trying to balance your budget when your bank app's frozen. You will manage for a while, but you won't really know how you are doing until the system back online. So, what do you think? Should the Fed still cut the rates even without the data? Drop your truths in the comments. I would love to see how you play it if you were Jeremy Powell right now. If this helped you make sense of the chaos, hit that like button, subscribe, and keep climbing that ladder of finance. See you next time.